Just to distill it down to brass tacks, Michael, who's at this point, who's getting hurt worse, or is it equal pain on both to both countries?
China's feeling more pain right now. There's the direct hit to the economy, and then there's this really important medium-term risk, which is supply chains moving from China. And we've seen more U.S. companies, more multinationals announce that they're looking at shifting new production to other markets. And that's something that's serious for China, and something that Beijing has relatively little that they can do to mitigate that.
Are we starting to see some signs that these things are filtering through to, we mentioned DHL and global shipping. We mentioned some companies that would be affected, like Fastenal or BASF. We saw a pretty hot inflation number. Are we starting to see things?
Sure. I mean, it's on the U.S. side, it's not really showing up in a big way in terms of the macro story, but absolutely. I mean, this is a very disruptive trade war, and you've got a lot of investment decisions that are being thrown off and companies that are impacted directly. So it's not to say that the U.S. is immune from this. It's just that the structure of China's economy means.
When does the stock market say this is going to cause a global slowdown, or is the stock market keying off Jay Powell?
I think it's very much that. And, you know, we've also got this important inflection point, which is, does Trump follow through with additional tariffs? For now, coming out of the G20 ceasefire between Trump and Xi, you know, I think the most likely scenario right now is that tariffs basically stay in place. I don't think either side actually has strong incentive to reach a trade deal. That's going to require some tough political choices by both Xi Jinping and President Trump. So I think it's sort of status quo from here. It's possible we get a deal, but it's also very possible that talks break down and we get additional escalation. And that's, I think, when you really would see the markets react.
We always think about how China is weathering this trade war in terms of how much pain it's feeling, and certainly it's showing up in the data. At the same time, there's another side to it, and that's a political side. I mean, we sometimes forget that Xi Jinping is effectively an authoritarian at the end of the day. And most recently, they've had to deal with protests in Hong Kong. And I'm sure civil unrest is a concern of theirs as well. How should we weigh the overall picture of China and what it's considering in forging ahead with this trade war?
It's a great point. I mean, the economic impact has been significant, but China places a lot of confidence in the stability of their political system. And the way they see it, you know, China's is a one-party state, quite strong rule. I don't see any real threats to Xi Jinping's power. So they're banking on that in this trade war. Their view is, you know, we've started to see some pain. Our markets have fallen, but we're sticking together. Now they're looking at President Trump. They obviously are closely watching the presidential election. So right now the question for them is, what is President Trump's political vulnerability? But from an overall perspective, I think Beijing feels confident about their ability to see through this trade war because of that political factor.
So both sides think they have the upper hand.
That's right. And that is not, you know, that combination does not lead usually to a trade deal if both sides think they're in the strong position.
Did Beijing not watch the Democratic debates?
They're watching. I don't think they know what to make.
Then I doubt if they think he's very vulnerable. Anyway, thank you, Michael. Did you?
I
mean, who's your guy or gal?
I'm a China analyst. I'm not going to go there.
Good answer.
Do you work for Ian?
I do.
Ian would take any of the Dems. I know that. All right, Ian's predicting any of them would win.